Hello and welcome to Money Matters TV. My name is Michael Verrill and I'm the Vice President of Strategic Development with the Sharp Financial Group. We are an integrated financial management firm helping business owners create value and grow wealth. Our unique interconnected approach using business advisory, accounting and tax, wealth management, and capital solutions allows entrepreneurs to help achieve business and personal success. Success is just the beginning. Thank you for joining us for our continuing discussion on growth stories, where we hear from entrepreneurs and advisors sharing their secrets and advice to help business owners need to know how they need to know to grow. From time to time, financial issues relating to healthcare, technology, or life sciences matters or companies may be shared on this show. These discussions are not and should not be considered financial advice. Furthermore, because this program is pre-recorded and shown at a later date, please keep in mind that the issues discussed today may not be current. You should always check with your financial advisor before entering into any financial transaction. I'm joined by my co-host, Cheryl Beth Kuchler with Ballantree Consulting. Ms. Kuchler is the president of Ballantree and also the founder of CEO Think Tank. She has over 25 years' experience providing business advisory services, leading strategic change initiatives, coaching executives, and designing leadership training and development programs. Since 2001, she has been focusing on business consulting and coaching services to CEOs, business owners, and senior executives for small and mid-sized companies, and also running think tanks for CEOs. She works with leaders as well as their teams to develop and implement business and life strategies which leverage their strengths and maximize their potential. Cheryl Beth, it's great to see you.
Great seeing you too. Thanks.
I know it's been a couple months since we've seen each other last, and you're working with entrepreneurs every day. Do you have some themes or current issues that some of the entrepreneurs you're working with are dealing with that you can share?
Probably the biggest one that has taken up a lot of conversation recently has been, how do you use social media to attract the right employees, not customers, but what are you doing to create an engaging workspace out on the internet, whether it be Facebook or LinkedIn or Twitter, and trying to figure out what the right recipe is for each business, because there's no set solution that can apply across the board.
It's become so competitive.
Yes.
I know, particularly in professional services. I've been in the accounting industry for some time, and Facebook was a huge driver for us to show company culture and let them know what working at our company would be like.
Right.
It's amazing
and for some companies, it's more about Twitter, and
right.
So trying to figure out which one it is.
What your platform is for the audience you're trying to attract.
Yep.
Very interesting. That's great.
Well, and we had a question for you, one of our viewers, Charlie Mann of Marion. When buying a business, what are some of the location ideas that one should look for? Okay.
I'm going to assume that Charlie means a physical location of the business. And there's two really main drivers for that, in my mind, to think about. We mentioned employees and how hard it is to attract employees. So you want to be close to your employee base, who you're going to hire, the talent that you need to run your business, and also in close proximity to your customers. So marrying those two things together is extremely important when you consider where to locate your business. I know a lot of suburban companies recently have been moving into downtown environments because of the urban desire for the urban or the millennials to be in an urban setting for the business. So we're seeing that as a trend.
Okay, thanks.
We always love to hear from our viewers, and if you want to submit information for a future show, here's how to send your questions to Money Matters.
Questions answered on Money Matters, please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address again is money, MONEY, dash matters, MATTERS, TV.com.
We are excited to introduce our guest, Mike McCurdy. He's an international director with JLL. They are a professional services and investment management company offering specialized real estate services. Mike started up the Greater Philadelphia offices almost a decade ago and has quadrupled top and bottom line results within the region over the last 8 years, taking a very entrepreneurial approach to the startup. His focus remains on creating a strong collaborative culture of highly skilled and motivated teams to problem solve for their clients and deliver results to JLL shareholders. Welcome, Mike. Thanks for joining us.
Michael and Cheryl, Beth, it's my pleasure in joining you.
You know, it's really interesting because you work for a Fortune 500 company, and yet you're extremely creative and entrepreneurial. How have you managed to integrate those two pieces, and where does the energy and drive come from that you exhibit?
Energy and drive. I grew up in a working class, middle class background in Northeast Philadelphia, where the work ethic was tremendous. So I think there was just a good foundation, and it was coupled with some street smarts, which maybe goes a little counter to some of the larger corporates in this world. So I like to think about, combining the best of both worlds, sort of, a hard driving middle class environment with, an education and all the things that you need to transform a large company into a nimble one. In terms of energy, I'd add a couple of other things. I came from an athletic background, played sports my whole life, and I think, we live in a competitive environment, so having that competitive spirit is always really good. And quite frankly, my wife can run circles around me from an energy level standpoint. So
keep you on your toes.
37 years of marriage, and her having just high energy and high spirits always keeps me moving.
Oh, that's great. That's great. Well, so in the introduction, we heard startup, and then we've heard Fortune 500.
Yeah.
Don't necessarily hear those two words in the same sentence. What was it about JLL that created that opportunity for that entrepreneurial startup environment that they seem to be looking for?
Well, there was a coincidence of two kind of facts coming together. So I was with a company that was purchased. It was Trammell Crow Company. We were bought by another large regional competitor who, frankly, I have all the respect in the world for. But at that time, I felt that I was a passenger on the bus rather than driving a bus. And Trammell Crow had been a lot more entrepreneurial as a firm, where they really empowered a lot of their people, and they were more nimble, if you will. At the same time, JLL was transforming its business model. They were historically a global consulting company and didn't really have boots on the ground from a geographic standpoint. So they were developing what I'll call a city strategy. At the same time, Trammell Crow was being purchased, and they knew of me personally as a competitor, reached out and said, we've got an opportunity to start up Philadelphia. So that's kind of how you take a large corporate environment and it becomes a bit of a startup. The other thing that's kind of noteworthy, and I think this is a benefit of being in Philadelphia, is a lot of Philadelphians like to say that we're the glass is half empty as opposed to half full. I like to think about the fact that because we're between New York City and Washington, D.C., the financial capital of the world and the political capital of the world, that frankly we're a little bit off the radar of some of the large corporates and can be more nimble and entrepreneurial because there's so much focus on D.C. and New York that we can kind of figure out the Philadelphia way of doing things.
That's great.
Yeah.
And be a little bit creative in your approach along the way.
Yeah, precisely. Yeah.
Is that creativity and that entrepreneurial approach what helped you weather the last 10 years? Because it's been an interesting economic time.
No doubt. So I started in 2007, and of course the Great Recession hit just after that. I guess I think about our business in sort of three distinct areas. I think about our people, because we are in a service business. It's all about the people. We don't make widgets. We're not production oriented. It's serving our clients. So people, our clients, and our shareholders. And I think if you focus on solving problems for your clients, even in difficult environments, you're going to help them weather through their difficult environment. As a result, it's going to help you as well, too. And maybe that's a little bit of my engineering education. I was, my undergrad is in civil engineering, and I was trained as a problem solver. So I approach everything in life as a problem, and a complex problem that is a challenge, and we're going to solve it. We're going to solve it for our clients, and we're going to put them in a better spot. Our clients pay with their wallets, and then our shareholders are in a better spot. So there's kind of a cycle. Take care of your people. Have your people take care of your clients. Your clients will take care of the shareholders.
It's very simple philosophy, right? And hopefully very successful. It's a lot of changes in commercial real estate, right? How people utilize office space, how they interact with the companies. You have more people working from home or working mobilely. What's for the next decade? What kind of discussions are you having, or what plans are there for how that real estate function might evolve for companies?
You know, it's sort of specific to industries, and that'll change over time. So we like to think of ourselves as leading edge in terms of being a change agent, and so we transformed our own office in Philadelphia to be what we consider to be the office of the future. So open floor plan, collaborative space, space where people want to come to work, including people that are not associated with that office, whether it's guests, whether it's clients, whatever. So views from wall to wall in terms of the whole floor. So no private offices, total glass, if you will. Some people feel that's an extreme, and there's certainly a need for privacy. If you're in a financial or an HR function, or even in my own role, there's times where I just need to be private because conversations get confidential. So I think the pendulum kind of swings. There was a movement to go, totally open, totally collaborative. At some point, it might be a little bit more balanced with some degree of privacy, the right balance between privacy and open collaboration. But I think we want to create an environment where people can feel comfortable being in the office, but they're also mobile because they're doing their work at a Starbucks, they're doing their work, in their car, they're on the road at client locations. But people like a family feel for an office, so there's a time to come and get together with colleagues and collaborate. And I think that's ultimately what you want to create.
Well, and what are some of the, I know you're a sort of a checklist organizational type of person. I mean, what are some of the, do you take new clients through some type of checklist as they're thinking about space? Are there some key things for folks that are listening if they're thinking about changing locations or creating a new business or moving business? I mean, what are some of the things that you
Well, so every client's
about?
different. I mean, there's still some, very traditional law firms that have not moved toward a more open, collaborative space. So if you're dealing with one of those, I mean, we're not there to change their culture. We're there to basically understand their culture and understand where they're going, and then optimize the best real estate solution for their firm in particular. So think about it as being first a good listener, and then reacting to the comments of the culture, giving them a little bit of feedback, because we don't want to be sort of a yes organization. We want to challenge our clients, but then ultimately it's our client's decision, right? So we want to point them in the right direction, give them options, and let them be aware of maybe where some of their peer competitors are heading, so that they're aware of where their industry is going. But ultimately, it's their call.
So, take you back to an early comment. You came into this scenario in 2007 from Trammell Crow with the directive from JLL to grow the business. Talk about where you started, like from an infrastructure standpoint. Like, what do you add first? Like, where there's millions of things you need to do, right? How do you prioritize and chip away at those things to be successful?
So it's a real chicken and egg scenario, right? Because again, going back to the public company, they expect results and revenue and profit
every quarter.
Every quarter, really, really important. So I think the first thing we really had to look at was, how can we bring in revenue, so producers, and take our various business lines, and at that time we really only had two, and just kind of jump start them and make sure that our talent base was the right talent on the ground, and then grow from there and figure out who was the best in the market that were out there that might consider this as a startup opportunity, want to be an entrepreneur themselves, and also be leaders, because we needed, as you grow, you need future leaders as well. The infrastructure part of it, I mean, frankly, that gets worked in over time. So when you're adding research and marketing resources and financial resources that are a cost side of the profit and loss sheet, then you've got to make sure that your revenue is secured, and then you can start to add that. So it's a simple matter of looking at where you're heading, taking some risk because at some point you need that infrastructure for sure, and then figuring out the right balance between growing your revenue and slowly growing your infrastructure costs as well.
Can you give us an example of an early lesson about what not to do as you were going through that process?
Well, yeah, sure. There's I think it's really important to trust your gut at the end of the day. And there's a lot of people who have a lot of good ideas that might be more self-serving than being more company-oriented in terms of goals. So it's important to be a really good observer, a really good listener, and to trust your gut and take advice from the right people and put the right people in leadership positions. It's better to probably take a little bit of time and due diligence on forming your key leadership team than it is to rush into that. It's harder to unwind something than it is to ultimately build it the right way and start it.
Did you turn to any advisors along the way to help you do that, or was that all, like you said, from the kind of the gut approach?
No formal consulting firms to help us out, but clearly a lot of advisors in terms of mentors from the past, in terms of people within my firm who were just slightly ahead of where we were in the market, and having a lot of conversations. And what do you think about this? And it's a real balance between being collaborative and doing the right research, but also being decisive, because you don't want to get into analysis paralysis when you're making a decision like that. You've got to move on, quickly. So you've got to gather your facts, talk to good people, trust your gut, and then make a decision and move on.
How did you manage the expectations of JLL, the big public company, as you're trying to build this in Philadelphia? It's obviously...
With difficulty.
Yeah.
Is the quick answer to that. I think what we really tried to do was show early on that we had a long-term plan. And that things don't always happen on a quarterly basis or even on an annual basis according to a calendar year. But if you're tracking according to the plan, and if you have a dip and then an occasional bump, rise again, the fact of the matter is that you stay on the plan, that you're staying on course. And it's a matter of really having close communication to show that there was a hiccup here, there was a delay there, or whatever, but ultimately things didn't go away. The plan is on track, and you need to demonstrate that. And it's getting the confidence of management and your board to see that, in fact, you are on track and that you're growing ultimately.
Well, and how do you do that? How did you get their confidence? Did you have meetings? What kind of disciplines did you have?
So we developed our long-term plan internally initially, and then we actually had one of our JLL consulting research organizations come in and independently validate that, do it without looking at ours. And ironically, they were they were very similar. I mean, they were really close. So that sort of gave credibility to where we were heading on our own. It was just validation. And then, ultimately, over the first couple of years, even in a down economy with a recession, we were hitting our plan. We were staying on track with it by solving problems for clients. Ultimately, I mean, you're somewhat familiar with our industry. So our tenant clients, the occupiers of real estate, were having pressure on their business. So whether they were in life sciences or financial services, they were finding a lot of pressure. They wanted to keep the real estate costs down in order to help the pressure. The landlords would love to have long-term credit-worthy tenants, even if it meant discounting the rents. So we were able to put landlords that were hungry for tenants together with tenants that were hungry to go long on their leases and perhaps get a discount with a down market. So we were able to actually solve problems for both landlords and tenants, and ultimately we were able to grow while we were doing that.
So you capitalized on the market dynamics.
We did. We played offense. It goes back to the athletic background. I said, when people were sort of buttoning down the hatches and doing everything from a defensive position with the economy, we said, we're going to play offense. And what we're really going to do is help our key clients and be very client-centric. And not worry so much about all of the things that were going on in the outside world, but focus on what we really do best. Obviously be mindful of the economy and have a contingency plan if things backfire on us. You always have to have a backup plan, but ultimately play offense.
I'm curious, you're growing, hiring people. We've talked before on the show about millennials and kind of the different position they take in the market and the expectations they have. Can you talk a little bit about hiring millennials, interacting with millennials at all in your business? Has that been different, or is that something you've had to kind of customize to?
I think it's been wonderful, is the short answer to that. I think we're in a unique position today that we have actually the ability to have 4 generations in the workforce at the same time. And if you set up your structure the correct way, every one of those generations can complement one another. We all know that the millennials, from a technology standpoint, are phenomenal. It's natural to them. They're so far advanced and they're so quick to pick up new technology. Technology is here to stay. As a firm, we're embracing it in a huge way. We have very senior people with major initiatives to help our clients, but our millennials are really helping us take it to the next level. But frankly, our millennials haven't also seen all the cycles that exist in our industry or in any industry. So having a little bit of gray hair to kind of balance out the energy of the millennials and the technology side is not a bad thing.
I was going to say, millennials can find any piece of information on the internet, but they don't always know what to do with it.
Right, exactly, yeah. They also have different career expectations too, so that can be a bit of a challenge.
What's your recipe for dealing with those expectations?
I think you have to manage expectations. I think you have to allow people to to grow and put them in positions to grow, but everybody can't have the big promotion every year. So sometimes it means that you're in the position for a period of time because you're just not ready for the next step, or perhaps the business isn't ready for that next step. And you just have to balance that, and early conversations are good. Being open and not having surprises where people feel that they're going to have another leap within the firm, and then there's not a conversation, and then that leap doesn't happen, and then they end up leaving because they're dissatisfied. I think it's better if you have a career management plan and you can just be upfront and honest and direct with them about their careers.
That's great. That's good advice.
Yeah.
Managing to a very cyclical business, what challenges does that, are there things that you do now in a upcycle that prepare for the down cycle, or do you just kind of, try to be as successful as you can during that upcycle? What's the strategy there?
Well, it's similar to a financial planner, right? So at the end of the day, you want to have a diverse portfolio of businesses that hopefully can capitalize on the upside, but also have some stability in a down market. So it's no different than having high-risk stocks and having a bond portfolio that kind of offsets some of that, or a money market portfolio, for example. So in our business, there's businesses like property management and facility management that don't generate as high of fees, but are actually high profit margin business and are also annuity business from an income standpoint. So those fees get paid pretty much on a monthly basis, as opposed to a large transaction that may or may not happen, and that would be more similar to, say, a high-risk stock. So you want to have diversity, and diversity with property management and brokerage, diversity within asset types. So you might have a situation where the office market is down, but industrial remains hot, or retail is hot, or multifamily is hot, which is a perfect example of Philadelphia. So a lot of our office product went from office to multifamily. So there were conversions from Class B offices that went multifamily, to the point that you made earlier on millennials moving into the city and baby boomers moving into the city as well too. So there was a big demand for that, and we didn't have a multifamily business at one point, and we said we need to play in that area. So we jumped into that.
So is that, you mentioned you had 2 lines of business when you started in 2007. That's one you added, I guess, the multifamily area. What are some others that you added?
So we primarily had property management and a leasing business at that time. We added a capital markets business, which really was the sale of all asset types, so multifamily, office, industrial, and retail. And we've added a debt and equity practice in addition to that. So the refinance, similar to what a mortgage banker would do in residential. So we have a refinance practice as well. In capital markets, we've added a large project management and construction business as well that we have. And then we have some verticals that we focused on. So healthcare would be a good example. We live in a huge eds and meds city in Philadelphia. So a lot of healthcare opportunity, a lot of higher education opportunity, and we've had some really nice wins in that area as well. And they're more like vertical practices than they are sort of subsets, if you will.
And how was it you working with your leadership team? How did you make those decisions to go into those different areas or to focus?
Worked a lot with research, frankly, to understand where the opportunities were in the market. And, we said, we sort of had a strategy that we would, if we were going to jump into a new business, we wanted to be able to perform as number 1, 2, or 3 in the industry. We didn't want to dabble in something where we couldn't excel. So ultimately what we said is, where are the areas where we feel we could be strong? Where is there an opportunity where we could take, say, 25% market share of that area? We know we're not going to get everything, but because we have great competitors out there, but where we could have a significant market share and do well. So that was ultimately our strategy.
Great.
You like to learn. You read. I'm sure you are staying ahead by going to conferences. Is there any business book or TED Talk or something like that you would recommend to some of the folks, again, in the audience? As I'd highly recommend you look at these 2 things. This will really help your business.
Well, a couple things, and I've always liked to read. It's actually what opened my world up in Northeast Philadelphia to a much larger global world. I was always a reader, and I said I need to participate in some of this and not be in this small environment where I was growing up. So I'd say a couple things. I was always a Stephen Covey fan, so The 7 Habits of Highly Successful People is something that I have read and reread many times, because I think that having a long-term plan, it goes back to what we just discussed, having a long-term plan, and then whether it's a mission statement or a 5-year plan or a life plan, and then translating that into a yearly plan, a monthly plan, a weekly plan, a daily plan is really important. You're always going to be off track. It's going to be dynamic. It's going to change. But having that be an evergreen plan is really important. So that's a wonderful book. I would also say The First 90 Days was a really good book as well, too. Particularly, you take on a new position, kind of establishing your leadership team and your style in the first 90 days. If you miss that opportunity, it's hard to ever capture it again. And it doesn't have to be the first 90 days on a job. If you reorganize your group, again, the first 90 days after the reorganization are key as well. And beyond that, I think there's a lot of business lessons that can be learned from various forms of literature. It goes back to the translation of athletics to business, again, the competitive spirit. I love to read about stories of survival or stories of people that have really done wonderful things for the world, because I think part of our obligation as a business is also to give back to society. So we live in a community. It's not just all about the bottom line.
Yeah, that's great. Well, thank you, Mike. This has been wonderful. We appreciate you spending time with us. Hopefully, viewers got some good advice there along the way of your very successful career. Thank you, Cheryl Beth, for being my co-host. As always, we appreciate it. The next guest on Money Matters TV is Nancy Amicon, Amicon and Company. As a reminder, you can download the podcast from iTunes and Stitcher, as well as see our programs on our YouTube channel or our website, money-matterstv.com. Thank you for spending time with us today.